Diego, it's amazing to have you in London.
Thank you for inviting me here,
Pl-
Richard. It's a pleasure.
Pleasure, absolute pleasure. You can come anytime. You bring the Argentinian sun, so it's always good to have you here.
Yes, I
Um,
think I got the best week, one of the best
you
weeks of the year.
you
No,
you
like
did you did actually. Last week was too hot, so
too
now
hot, exactly.
you've got the perfect one. You've got the perfect one. But no, thank you for coming. And yeah, so today we're going to be talking about Bitcoin and financial infrastructure. And obviously, Rootstock Labs. It's been around for 10 years when it was first white paper published, mainnet since 2018. And so you've been building on Bitcoin for a long time, longer than many, many people in the industry. And before we go into maybe the future of Bitcoin, and that's what a lot of people love to talk about, and we do too, I want to talk about what it was like back then in 2018 when you were building. What were people building back then? What was the focus within the Bitcoin industry?
Well, I think it's interesting because the main projects around Bitcoin, Lightning, Blockstream, the Liquid network from Blockstream and Rootstock, all were presented around 2014, 2015. Like the ideas, the white papers were presented there. Actually, the sidechain concept, that is like creating a secondary layer on top of Bitcoin with Bitcoin as the native asset, was published by Blockstream at the end of 2014. And then all of those projects went live in 2018. Rootstock was the first one in January, and soon after, Lightning and then Liquid follow suit. So it's interesting that even though we were not synchronized, we were not like things like took more or less the same time to mature and become like actual protocols that were production ready. But if you think back then, all the attention was into Ethereum because there was this big narrative in 2017 about the flippening that Ethereum was the future, that Bitcoin was not being able to modernize or to evolve, which was the opposite of what we thought. No, it's like actually people was challenging us and saying, well, what you're doing is a hack. It's because Bitcoin cannot be evolved technologically. You are trying to hack it. But actually, it was not that way. We were following the OSI model that the internet was built after the OSI model, where we believe firmly that delegation of concerns in different layers, in different protocols, was actually the right thing, the right architecture to build. And I think time is proving us right. It's like, but it took us 10 years to be right, if in a way, because our vision was like, if you have a layer that is focused on store of value, it needs to be extremely safe, and for that you need to have some trade-off. You need to have trade-off of scalability. You need to have trade-off on programmability or functionality, and that's exactly what Bitcoin Layer 1 did. So they say, okay, we only focus on security. Everything else we can trade off. When we launched Rootstock, what we did is we created an economic layer, an economic coordination layer. That the use cases of that are DeFi. The more decentralized finance is, the more widespread. But we think that economic coordination system will serve other purposes in the future. Is a process. And we did trade off some security because we have a programming language that is of general purpose, so you can program anything. Bitcoin scripting language is limited. But it's the foundations for other use cases that go beyond storing value, like lending, payment processing, exchange of assets. So that was the foundation we were building because we believe back then, and we still believe, and I think that Bitcoin was going to be the safest decentralized security infrastructure in the world forever. It's like not like for it was not about technological innovation. It was about the design that Bitcoin as a security infrastructure had, that is based on proof of work. And that was the thesis. And then in our original vision, I shared the vision of the Internet of Value at the end of 2015. That was like third layer, that was a scaling layer. And that scaling layer actually is not a blockchain layer. What it is a peer-to-peer layer where you exchange cryptographically signed information. between parties, and you use the economic coordination layer as a last resort. If people don't comply with the agreements, then you can go to the underlying layer and enforce. So it's kind of a police system that and legal system you cannot escape, because it's like unescapable. So
and just picking up on a point you made earlier there in terms of the thesis has been proven right so far, and we think it will obviously be proven right into the future in terms of the security and those kinds of aspects. And you've got within Rootstock, there are characteristics of Rootstock that lend itself to that super well.
Yes.
When you were building and contributing towards Rootstock, what are those characteristics, and why were they so important?
We had 3 architectural choices. Four if you add the one of the delegation of concerns into multiple layers. But one was we had to create a trust minimized bridge to Bitcoin. So because Bitcoin was the native asset of Rootstock, as a sidechain, we need to create a bridge where Bitcoins were locked into layer 1, and that would enable the Bitcoins to circulate in Rootstock. So that was one of the main technical challenges. That bridge has proven to be the safest in the world in between 2 blockchains, because it has been running for 8 years, since January 2018, with 0 hacks and thousands of Bitcoin at stake. So, and we have seen that a lot of the news in the last 2-3 years were about hacking of bridges. So the other thing is we wanted to have full alignment from a game theoretical perspective with Bitcoin. So all the transactions in Rootstock are secured by the Bitcoin miners through another thing that we developed is merge mining. And that creates 2 things. One is that when we started, we had 5% of the hashing power of Bitcoin protecting Rootstock. Now we have 85% of the hashing power of Bitcoin protecting it. But also, because of that, every transaction in Rootstock is creating revenue for the Bitcoin miners, so it's making Bitcoin safer. So that's another architectural decision. And the third one, that was Sergio Lerner, our chief scientist and co-founder. He was one of the 3 security auditors of Ethereum. So he knew the Ethereum codebase inside out. And he said, what they are building is amazing. It's very good, very high quality. So that was the other thing, saying instead of reinventing the wheel or creating a smart contracts environment from scratch, why don't we join the standards that are being developed that we believe are good, have good quality, good technical elements. That's why also Rootstock is fully EVM-compatible. So that it's a great thing, because you can have all the Ethereum capabilities running on Rootstock, secured by the Bitcoin miners and with Bitcoin as a native asset. So it was, in our vision, that was the way you could extend Bitcoin capabilities.
And was it something where, when you were building that, you were thinking about the institutions and the institutional marketplace being the use case, or was it more a theoretical and best practices approach?
Well, the purpose of Rootstock was actually to make Bitcoin valuable for all society. That was something I had, my discussions with my friends, my Bitcoin maxis, that they were seeing Bitcoin only as a store of value, as a replacement for gold, which it will be. I truly believe that. But I was saying is as long as Bitcoin is only store of value, then it's tailored to 15% of the population who can store value, maybe 20% of the population who can store value in 2 years or more. No, it's because of the volatility, because of the having a hard asset, hard money, implies that it will be volatile. It's fully dependent on demand. So I said we need to make Bitcoin work for everybody. So that was the. So when I was thinking even going to the people who is excluded from the financial system. So I said, if we want to serve that people, we cannot fail. That people lives day to day, week to week. So we need to be the safest environment possible to manage personal finance and everything. But then, of course, you don't start there, because that's like the more challenging environment. It's like, in order to serve that, people, like, they don't even have anything as collateral, so you need to create reputation systems, things that I think will come in the future and are a big part of what the Rootstock ecosystem will build. But first, you need to serve institutions. Because institutions are the ones serving individuals, and that's exactly where we are in this point of maturation of our project, no? Because it was first the technical challenges, then we realized, like, the technology itself alone is not enough. You need to provide utility. In order to provide utility in Rootstock is an ecosystem, it's not an application. So in order to create utility in an ecosystem, you need to find the first pioneers that will create, good lending protocols, that will create, yield for Bitcoin, stable assets backed by Bitcoin, create all that environment, have interoperability to the major crypto ecosystems, connect with the ones, creating the footing on the local financial systems, the wallets, the brokers, the exchanges. So that was the second phase of our project. And I would say all the pieces fall in place more or less a year and a half ago to 1 year ago. And then it was like we were trying to bring institutions to say, okay, we have the safest environment for managing your Bitcoin treasuries, your treasury needs in general. But then, we face another problem that was like, for an institution having a protocol as a counterparty, not only is a technical challenge, but also it's not embedded in how institutions operate. So then we realized, because that's part of the discovery process we are ever going, we needed to create that institutional interface, and that's where we are now. It's like we created an institutional interface, so all sorts of institutions of different sizes can use this infrastructure that we believe it will be the foundations of the financial system of the future for their daily needs today.
Yeah. No, I love that. And that is actually one of the biggest reasons why I joined RootstockLabs. Prior, I was at Circle, where they were building out the stablecoin world. And it was something where the goal was that fairer financial freedom into the future. And so there was the infrastructure side, and then it was integrating with the different businesses who could get that kind of capital down to the people who needed the most. But it was something where, even I saw that not everybody wants dollars, for example. Dollars aren't always the best thing, and Bitcoin is a better rail for it to run on, a better network for it to run on. And I think that the goal that we always have and that we always speak about internally, right, is that that is the end goal, that it is for everyone to be able to use. And it's just, how do we get there throughout that piece, and how do we make sure that Bitcoin is as productive as possible, so that there is the most fair, the most liquid, the most efficient market that there is.
And safety also translate into efficiency, no?
Yeah, absolutely.
Not at the beginning, because the markets are still small, and that's part of the process.
Yeah.
But if you have a safer environment to do lending, that eventually will be the best, financial products. The more efficient financial products will be there. No?
Yeah. If you look at the traditional world of whether it be payments or finance, and whether it be the AML, the KYC, the frauds, and how much that slows down traditional businesses, or in terms of moving money around the world. And you see new regulation comes in that means a bank must have to do these additional checks, and it's good. It's the right thing for the end user. But if that's already built in an infrastructure in some way that is programmable, and it's already written into the code, then it's just a better system.
Exactly. And you are removing counterparty risk and turning it into a platform risk.
Yeah.
But platforms, as they run for more time and they have more money at stake, they become more reliable.
Yeah.
And with counterparty risk, it's a little bit of the opposite. It's like, it's like in the factories where they say X amount of days without an incident.
Yeah.
It's the same thing. When you have a counterparty, it's like X amount of days without an incident. With protocols, it's like the more days you have running, the more capital you have at stake. There's a point where they become so hardened that they are totally reliable,
Yeah.
no? And that removes a lot of the cost
Yeah.
in auditing, in a lot of things. Also because these systems are fully transparent.
Yeah.
So you can watch them and monitor them like in real time.
Yeah, yeah, yeah. You spoke at the end there about the institutions using Rootstock. What are they currently using Rootstock for, and what do you see them using Rootstock for in 1 or 2 years' time?
I think it's very simple things. It's like the institutions that wants to have their Bitcoin treasury, and want to make their Bitcoin more productive. We have the tools to do that. It's like we have like better products to create yield out of Bitcoin, safer products to create yields out of Bitcoin. We also have products where you can get loans against your Bitcoins, and we are working on making also those things composable. So then you can have both things at the same time in an extremely safe environment. Some institutions also are, because when you create a lending market backed by Bitcoin, then you have yield for stable assets. It can be dollars, pounds, or euros. So we are also creating products that are attractive and that have an extremely low, I would say, almost no risk. They don't have counterparty risk. The only risk is, as I mentioned, the platform risk. But these products are extremely safe. So your dollars that are being lent to a Bitcoiner that wants to an institution that wants to manage their treasury. Everything is on chain, managed by a smart contract. So there's no counterparty risk, and so people, as they understand this, they will be choosing those lending facilities over traditional lending systems where you have a black box and you don't know where your money is going, how it's being managed.
Yeah. And the people that we're working with, right, they're the ones that are adding utility to the chain. Like you say, it's those Bitcoin balance sheet holders, it's those miners, it's those that are wanting to add productive capital back into the network. And so it's a great aspect that's supporting the layer one, supporting Rootstock, and then providing and this is what everyone is talking about nowadays, that credit market that is the expansion plan, whether it be Saylor or whoever.
Yesterday, Michael Saylor at the Sapo Summit was talking about this, no? And actually that's if you want the killer app, we have been building for many years now, for 3-4 years, but then again, we were building it fully in smart contracts, and then we realized for these to reach to institutions, we need to add this layer, and that's what we are doing now.
Yeah.
And you mentioned miners. Miners are the natural users of this technology we are building because they are already producing Bitcoin. They need to wait for the right time to sell. So in between, they want to get loans at the best possible hurdle rate.
Yes.
In order to fund their operations and grow their operations. And we are building products around that and around understanding, the mining industry and how we can provide better credit lines for them. No?
Yeah, and they're a great credit and business model for the investor and the allocator side, because they've got a traditional business in the sense of hardware and assets, and collateral if that's wanted to be used within that loan structure. They've got obviously then a recurring cash flow in terms of the hash that then the actual can be mined, and then also it's fully trackable on chain. So it's something where as an investor you can look into it and say, I can see the recurring cash flows. I can see the assets. It's got a crypto angle to it, so I'm also within that space, and that's where we're also hearing that interest in terms of the actual hash rate as well.
That's very special because we are merge mine. Because Rootstock is merge mine with Bitcoin, we can see in real time, if the productivity of a miner goes down, and react and adapt very fast to the changes in that and understand the risk in a way that very, very few others can do. No, so I think that's why they are like the obvious customer for what we are building.
Yes,
but we are seeing other institutions that are willing to do the same. No, So in different miners is the low hanging fruit, but other institutions like that are doing settlement, and then they have idle capital, and they want to work on that idle capital, but they want to be able to withdraw the capital very, very fast. That's I think blockchain enabled that very nimble way of managing capital.
Yeah. You've been in the industry for a very long time, and so you've seen the ups and the downs. When we talk about the miners and the Bitcoin balance sheet holders, with the price as it is, with the markets as it is, what sort of pressures is a miner facing at the moment, from whether it be an economical standpoint, whether it be a balance sheet standpoint?
I think, well, as I said, miners run, I would say, a financial business more than anything, because it's like they put fiat capital, dollars, pounds, or euros, into machinery that will produce Bitcoin, and they know the cost of production in dollar terms, and they need to recover that with the produce that is Bitcoin. So all the work is like getting in, efficient lines of credit to fund or any efficient capital access to fund their operation, to fund their setups, and then wait for the right moment to liquidate the asset. So they are under constant pressure more now, for example, when they didn't have the tools, they had to liquidate the Bitcoins. And sometimes if Bitcoin is below the production cost, that is liquidated Bitcoin at a loss. And so these tools that we are building enable the miners to wait longer.
Yeah.
So maybe they can wait for a year, a couple of years, without the need to sell Bitcoin, and then they can, optimize the right timing to sell, and that can create a big difference in terms of the profit for these kind of companies.
Yeah, absolutely. It turns that idle, dormant asset into something that, as any traditional corporate treasurer or CFO would be considering with a fiat currency. And I think that's the shift that we're now seeing. People are, especially within the mid-sized miners, right? They're really looking and thinking, how do we manage this best? Because we don't just have to focus, or we shouldn't just focus on the mining that we're doing. It is, what are we then doing with what we've mined, and how are we making that productive?
Absolutely. And one thing that is interesting is, like, because the Bitcoin miners are securing the Rootstock network at the same time, it's like they have relative control of the security of where the assets are located, and they can monitor what is being done with their assets in real time. So that's very unique. You don't have that if you send your Bitcoins to somebody else, even if you get a loan backed by Bitcoin. It's like very difficult to have that monitoring of where the asset goes, what is being done, if there rehypothecation of the asset or not.
Yeah.
So
absolutely. Yeah. Last question, because I know you're a busy man and you're being moved around London at many speeds. What excites you most about the next 1 or 2 years with Rootstock?
I think we are enabling the first wave of financial institutions. I think the word fintech is outdated, because there's no financial institutions without technology these days, of different sizes, because we are creating foundations, like the financial tools that can scale, and I think the fintechs, or the financial institutions of the future, will be hybrid in nature. They will offer Web 2 mobile interface to their customers, but they will operate on the back office on all the tools we are building, because that lowers their operational cost and the risk they are taking heavily. So my excitement is about to see these first institutions being born, and be partnering with them, because they will be fulfilling a very important thing, that is like the compliance layer, how you have a foot on the ground on the local financial systems, and we are providing everything else they need to operate. And I think that partnership, and how that evolves eventually into a global settlement network and other things, I mean, I'm very excited about that vision being realized, and how that will impact people's life.
I think we all are. It's an amazing mission to work for. thank you very much for your time. It's been an absolute pleasure speaking with you and then having you here in London.
Thank you so much.
Thanks, Ian.
Great pleasure.